Hello, Jason here. Today is December 16th, and this is your aftermarket update. So we did have another positive day here at the Oil Trading Group. This makes day 16 out of the last 17 days that we have ended up on the positive side of the equation. It was not an easy day today. We talked about the fact that this was not going to be an easy day with the contract rollover period, the Fed announcement, crude oil inventory report. It was a busy day, and I started out this day in a hole. So one of the things and one of the reasons that we talk about the Top Step Trader and that we trade the combines live in front of you here every day is due to the fact that you need to have capital to be able to withstand some of the ebbs and flows that go on inside a trading day. So you can see here, these are the 17 days that I've been in this combine. In this 7 days, I'm up $3,528, and you can see here today we finished with a positive balance of $128 after commissions. Now, that's not a huge number, but we were down today heading into this final trade of the day, and we were able to make a positive day out of today. So again, we did have the crude oil inventory report number. We came up into, we were rotational around our center point here today. We had this big fall out of the number here, out of the inventory. Another day, another week where the where there was a build in the crude oil inventory number, and the market reacted accordingly. After we got down to this 70 level, and this was a level that if you were in the room today, you knew that we said that if this number held, and it did, and we were long around the 80-81, that trade lasted for about 2.5 hours today. Once we did finally get up, we said we were going to take out this number up here at 19. We were long from this 81, and we got all the way up to here to the 19 level, which is exactly what we had talked about and exactly what we did end up doing. Let's take a look here at some of the bigger picture ideas that are going on here in the marketplace right now. If you take a look here at this pitchfork, you can see and we use this pitchfork to try and determine potential support and resistance levels when the market was doing like it did on Monday, which is it was down in some new low territory that we had not been in since 2009. So I'm jumping around here just a little bit as I kind of go through this recap. But if you take a look back here, this low here was made on Monday. This is down here at 34.53 on the low. We have not been down that low until since January of 09, December of 08, February of 09. So the market reacted a little bit here on, you had some short covering that went on here, but we are still clearly bearish. And so one of the reasons we use that pitchfork, and I'll come back and talk about it in just a moment. What I want to do here is I want to draw your attention to the fact that one of the things that we talk about is that the high or low of the week is made on a Monday or Tuesday. So you had a nice big fat high here and a nice big fat low here on Monday. So the high on Tuesday, the low on Monday. If you come back the previous week, the high was made here on Sunday night going into Monday. The previous week, this is Monday, the high was made here. And again, you had a low down here on Monday. So you get a pretty good sense of what's happening by watching Mondays and Tuesdays and the price reaction. Now that we have rolled out here of this area, we are still in a little bit of indecision zone. If you grab this swing low and measure it to this swing high on Tuesday, you came right down here to the 35.25, 78.6. Also, you stabilized above that area that we look at, which is our sweet spot here at 35.52. So we've started to stabilize above that area. So we're a little bit unsure yet as to if this low to this high, and we maintain this low here because we've come back to a retracement point. It's a little bit unsure still here at the moment. The jury's still out, and we'll know more tomorrow. But having said that, there was a fairly significant bearish number on the inventory report today. It was a build rather, 4.8 million versus a drawdown expected of 1.3 million. So again, a bearish number there. So we'll see what happens here tomorrow. One of the things here too, we had the 1.27% range extension of this swing up. So you had this swing down, you rallied into this swing, and the 1.27% extension of that level was 36.72. We topped out there today at this one deviation off of the center point of the pitchfork, and we have now traded underneath. It would be realistic and could be realistic to expect us to come down to this 32.51, which is the 161.8 and is the center line. This could happen before the week's end here if the bearish momentum continues. So we'll be watching for that level as well. That also is important because that 32.50s is right here in line with these lows back in to 2009. So we'll be watching for those areas. Now, we may be switching contracts as soon as tomorrow. The contract expiration for the January contract is on Monday, but as we sit here right now, it is an exact 50-50 split as the market just opened between the February and the January contract. So it is exactly a 50-50 split here. So it may be tomorrow, it may be Friday before we make the switch. We'll have to wait and see as the market develops into the overnight session. So one thing again that I want to reiterate here to you, we were down today, and there was time where it didn't look like we were going to be doing very well today, but we stuck with it, and we continued to follow the plan and trade the ideas that we had set forth before the session started. In addition to that, it is important to remember that not every trade is going to be a winner. There are going to be periods of losers. That happens. But again, if you stick with your plan and you stay with what you're doing, more times than not, you're going to find success. Now, again, we didn't hit a home run in here today. It was a small winning trade. Again, if you go back and look at the numbers here, the trade was a small winner at $128, but that's okay. It's sometimes in trading, it's not how much you win, it's how much you don't lose. So again, another positive day here. We've had 16 of the last 17 days have been positive, and during this run here, we are up over $3,500 in a trading month, and that is, by the way, trading two lots. So trading a two lot, we're up over $3,500 in 3 trading weeks. We have one more trading week to go before the holidays, and there is still opportunity to add to that total. So again, don't give up when you see a couple of losing trades. That's the only thing I can tell you. Don't give up when you see a couple of losing trades. That's why we're trading a Top Step Trader Combine, so you can be funded properly so that a couple of losing trades don't end up knocking you off your pegs and you're not able to be there when the winter comes and gets you out of the hole and makes you positive on the day. So again, as always, I want to say thank you for spending time listening to the video and following along with us here at the Oil Trading Group. And until tomorrow, I want to wish you good luck and good trading.